Hi, I'm Lauren Hamilton, accountant for therapists. Today I wanted to go over 5 red flags that the IRS actually looks for when they are reviewing your tax return, and especially when it comes to your business income or practice income. So let's go over those so that way you can be better prepared for when you are filing your taxes or when you're reviewing those with your tax preparer. So let's get into it. So, red flag number one is large expenses that don't match your income. And what I mean by that is the IRS is going to be looking at the proportion. So, if let's say, for example, your total income is 60,000 and your total expenses it's 55,000, they're going to look at that proportion and say, does that make sense? Does that make sense for this industry? And if it doesn't, then they may look further into what make up those expenses that total the 55,000. And so usually things that they are looking for are travel, meals, equipment, and anything labeled like other or miscellaneous categories, which is why I really don't like using those types of expense names because it is very vague and we want to know what's in those accounts that's making up that balance. So in order to make sure that you have everything that is legitimate in these accounts is really just to review it. You have evidence to show that yes, I really did have all of these travel expenses for a business related expense. And same thing with meals or equipment or anything like that. So anything that you have on your tax return as an expense or a deduction, you should be able to have evidence for it, meaning documentation, screenshots, anything like that, that you can then send to if you were to get audited, send to the IRS to prove that those were legitimate expenses. And also just making sure that you're categorizing things correctly. A lot of times when we get into the weeds of things, sometimes we're overthinking things maybe, or maybe you're doing it really fast too, and you're just putting things in places. So it really does matter where you are coding your expenses to and what type of account you're putting them into. The second red flag that the IRS looks at is consistent losses year after year. And so let's say you've been in practice for a few years now, but every year you have run a loss. And while, again, maybe that could be true in some cases, however, the IRS flags that as a red flag. And what that can sometimes signal to the IRS is this really a business or is it a hobby? And not to get too in the weeds of things with, that piece of it, but a hobby to the IRS is not a business. And a lot of people can mistake that as being a business. So, but in your situation, you are running a legitimate business, but it's especially important for newer practices to show that you're actively trying to be profitable and you're adjusting prices, you're looking at your expenses, and you're trying to restructure over time to make sure that you are being profitable. Obviously, we go into these businesses to make money, and while maybe being a private practice owner isn't going to be maybe making you millions, but you do want to have some sort of profit. And so the IRS wants to see that too. And if you're constantly creating a loss in your business, the IRS might look at that as being not a legitimate business. And that's what we don't want the IRS to think. Red flag number 3 is home office and high expenses in combination. So while the home office deduction is completely valid and, legitimate, it can cause a red flag when it's paired with high overall expenses. So kind of going back to that red flag number 1, where maybe your expenses are a little higher in proportion to your income. And so if the IRS notices that you are taking a home office expense deduction, then they will look into that to again, make sure that you're calculating those things correctly, or are you putting extra items in there that maybe not necessarily you can use as a legitimate business expense. So when you are using home office deductions, you want to make sure that those are realistic and make sure that your home office space is being calculated correctly as far as the amount of square footage versus the total square footage of your home, and being clear and have that documentation ready for if you were to get audited, to be able to show them the evidence that you have that you are using this as a legitimate expense. Red flag number 4 is poor or missing documentation. And this one's huge. And this is one that I'm sure we're all pretty much aware of. I think we can all, hear those stereotypes sometimes about you have to keep receipts and keep all this documentation. Even I've been saying that in this video about making sure that you do have the documentation ready for if you did have an audit with the IRS, to make sure that you can provide these proof proof, and that's all it is to the IRS is proof. Obviously, there's millions of people living in our country that have to file tax returns, and so the IRS is, does not have time to go through and audit everything, which is why there are some checks and balances and kind of the things that we're going through now. So things will get flagged that they will know that they need to dive deeper into. And so when that happens, the best way to not get anxious about it is just to know I do have my documents. I have all of the paperwork that I need in order to provide to the IRS if they were to ask for anything. It's a good idea to keep those records just on a digital copy. The IRS doesn't necessarily need the paper copies of anything. They just need the document either electronically or paper. Also, one thing that I, always try to mention is keeping a separate business bank account. If you're mixing things, business and personal together in bank accounts, that's really hard to get all of that information in organize it into a good way for the IRS to actually look at it if they were to come and audit. And when they see that, they really don't like seeing that because they know that there's a chance that there's some personal items that maybe you mistakenly took as a business expense. And so the IRS just really doesn't like looking at that. So really try to avoid having a personal bank account and using it for business expenses. So again, this one is a red flag for sure, but it's one of the easier ways to feel confident about your tax returns is making sure that you do have all of this documentation and you have it filed and in a safe place for whenever the IRS might need to look at it. So red flag number 5 is misclassifying expenses. I was just kind of talking about this with your personal expenses and with your business expenses. So again, really, making a conscious effort of keeping your business separated from your personal finances. Also understanding what are correct write-offs. And when I say write-offs, I guess that kind of goes hand in hand with deductions and expenses. So all of those words mean the same thing, but just making sure that you understand that if you do buy a piece of equipment, and I guess when I say equipment too, I'm saying like computers, office furniture, anything like that, that's, those high dollar amounts, just making sure that you are categorizing those correctly. That will also keep your records clean. And like I had mentioned before too, overusing vague accounts or categories like miscellaneous and other, those are never really good to use. You really want to be specific about what that account has. So if you need help maybe trying to figure that out, you can always reach out to me, but just really the more detail you can have in the account name, the better. So what I like to do with my clients is actually use a specific chart of accounts, which is literally a list of accounts that you would use for when you're categorizing your business expenses as you're going through your accounting and through your bank accounts. So that way you are labeling those correctly. And then always ask questions if you're unsure. There's never a issue with not knowing something. The issue is doing something that you are aware that you're not sure of and continuing to do it anyway. It just makes your life easier and my life easier too as a tax preparer to just kind of have that conversation up front and just don't guess. I mean, that's kind of where mistakes can happen. You usually have a 50-50 shot, so sometimes you might guess correctly, but most of the time you might guess incorrectly, and that can lead to bigger problems in the future than you may be aware of. So as we go over these, if any of these are kind of jumping out to you or you're kind of thinking through your accounting and maybe what you've talked about with your tax preparer, it's good to, like I said, ask these questions as they come up. Don't feel like, because you didn't go to business school or you don't know how some of these things work as far as taxes and stuff. That's why we have a complete profession for it. And that's what, accountants like me want to help you do. So that way you are keeping correct records and you have your documentation and you're doing those right things. So that way, if you ever were to get audited, it won't be a big scary thing, because getting audited, it can be scary and, it can be overwhelming, and it's something that you don't really want to have happen if you can avoid it. And to avoid it would be to do these things properly. So the goal here is just to be prepared. And that's really what I want to encourage you to do and want to help you do. So if you feel like maybe you're a little overwhelmed or maybe you don't know if you're putting things in the right places, I would love to help you with that. And I do offer a financial health check which I go through your accounting and make sure that things are being categorized correctly. And if they're not, I give you those fixes and suggestions, and especially in a priority list that you can work through and get those things in a better system. I hope this video was helpful, and if it was, please like and share it with somebody else who might also find it helpful. We always want to support those who are doing the incredible work that you are and making our world a little bit better every day. Thank you so much, and until next time, be well.